Hey, what's going on everyone? Welcome back to the channel. Look, we all gotta start somewhere, right? And when it comes to Forex, that somewhere doesn't have to be this huge account with thousands of dollars. Today, we're breaking down how to dip your toes into the Forex market with just $100. Because every expert trader you see today was once a beginner with a small account. So if you're ready to stop watching from the sidelines and start learning how to potentially grow that Benjamin Franklin into something more, then stick around. Alright, before we even think about putting a single dollar on the line, we need to understand what we're getting ourselves into, right? Forex trading isn't just about luck, it's about knowledge, strategy, and a bit of patience. Forex, or foreign exchange, is basically the global marketplace where currencies are traded. It's one of the largest and most liquid markets in the world. Think of it like this massive online swap meet, but instead of trading baseball cards or vintage sneakers, we're talking about currencies from all over the world. Dollars, euros, yen, you name it. The sheer volume of transactions happening every second is mind-boggling. Now, the goal here is simple. Buy low, sell high. But achieving that goal requires a deep understanding of market trends and economic factors. You're betting on whether one currency will strengthen or weaken against another. This involves a lot of analysis and sometimes a bit of gut feeling. Let's say you think the euro is going to rise against the US dollar. You would buy the EUR-USD currency pair, and if your prediction is right, you make a profit. But remember, the opposite can also happen. You would buy the EUR-USD currency pair, and if your prediction is right, you make a profit. But remember, the opposite can also happen. But hold your horses. Because Forex isn't some get-rich-quick scheme. It's a legitimate market. But it's also highly volatile, meaning prices can swing up and down like crazy. It's a legitimate market. But it's also highly volatile, meaning prices can swing up and down like crazy. This volatility can be both an opportunity and a risk. That's why understanding the fundamentals of Forex, like economic indicators and market analysis, is crucial. These elements help you make informed decisions rather than just guessing. And this is especially true when you're starting with a smaller amount like $100. You need to be extra cautious and strategic. You can't afford to be reckless. Every trade counts. Each decision you make can have a significant impact on your trading account. Remember, we're playing the long game here, building a solid foundation of knowledge and strategy. This isn't about making a quick buck. It's about sustainable growth. Think of it like learning to drive. You wouldn't jump straight into a Formula One car, would you? You wouldn't jump straight into a Formula One car, would you? You'd start with something smaller, master the basics, and then gradually work your way up. You'd start with something smaller, master the basics, and then gradually work your way up. The same principle applies to Forex trading. The key is to focus on learning the ropes, managing your risk effectively, and building a solid trading plan. With time, patience, and practice, you can become proficient in Forex trading. Okay, now that you've got a basic understanding of how Forex works, it's time to choose a broker. Think of a broker like your gateway to the Forex market. They execute your trades, hold your money, and provide you with a platform to trade on. Now, choosing the right broker is absolutely crucial, especially when you're starting with a smaller amount like $100. You can't afford to get hit with high fees or shady practices that eat into your already limited capital. So, what should you look for in a broker? First and foremost, make sure they're regulated by a reputable financial authority. This provides a level of security and ensures they adhere to certain standards. Second, check their minimum deposit requirements. Many brokers have low minimums, sometimes even as low as $10, making it easier for beginners to get started. Remember, this is your hard-earned money on the line, so take your time, do your research, and choose a broker that aligns with your needs and your budget. You've chosen your broker, now it's time to open your trading account. This is where the rubber meets the road, folks. This is your command center for all things Forex. The process is usually pretty straightforward. Most brokers have easy-to-use online applications that you can complete in a matter of minutes. You'll need to provide some basic personal information like your name, address, and contact details. You'll also need to verify your identity, which is standard practice in the financial industry. This usually involves uploading a copy of your government-issued ID and a proof of address. Once your account is verified, it's time to fund it. Choose the method that's most convenient for you. Chapter 4. Your trading strategy, scalping versus swing trading. Okay, so you've got your account set up, you're ready to trade, but hold on a second. Before you go all in with your $100, we need to talk about strategy. Remember, in Forex, knowledge is power. And with a smaller account, you don't have the luxury of making reckless trades. You need to be strategic, calculated, and most importantly, patient. Now, when it comes to trading strategies, there are countless options out there. But for beginners with limited capital, I recommend focusing on two popular approaches: scalping and swing trading. Scalping is all about speed. It's like being a cheetah in the Forex jungle. You're looking for quick, small profits from minor price fluctuations, often holding trades for seconds or minutes. It's fast-paced, requires discipline, and isn't for the faint of heart. Swing trading, on the other hand, is more like being a patient lion, stalking its prey. You're holding trades for a longer period, from a few days to even weeks, aiming to capture larger price swings. The key is to choose a strategy that aligns with your trading style and stick to it. Master one strategy at a time, and you'll be much better off in the long run. Remember, consistency and dedication are crucial in the world of Forex trading. By focusing on a single strategy, you can refine your skills and increase your chances of success. Chapter 5. Risk Management 101, Protecting Your Hard-Earned Cash. Alright, let's talk about the golden rule of trading. The one thing that separates the amateurs from the pros: risk management. It's the backbone of any successful trading strategy. This is especially crucial when you're working with a $100 account. Every dollar counts, and you can't afford to be reckless. Think of risk management like your trading seatbelt. Just as you wouldn't drive without buckling up, you shouldn't trade without a solid risk management plan. It won't prevent all accidents, but it'll definitely minimize the damage if you happen to crash. It's your safety net in the volatile world of Forex trading. So, how do you manage risk effectively? It starts with a clear understanding of your financial limits and setting realistic goals. It all starts with understanding one simple concept: never risk more than you can afford to lose. This principle is the cornerstone of risk management. With a $100 account, that means risking no more than 1 to 2% on any single trade. This keeps your potential losses manageable. That's right, $1 to $2 max. It might seem insignificant, but it's a crucial part of staying in the game. But Graham, you might say, that's such a small amount. How can I make any real profit with that? And you're right, it is. But remember, trading is a marathon, not a sprint. But here's the thing, it's not about getting rich quick, it's about protecting your capital and staying in the game long enough to learn and grow. Consistency is key. Your next line of defense are stop-loss orders. These are essential tools for any trader. These are preset orders that automatically close your trade if the price moves against you by a certain amount. They act as a safeguard. Think of them like your emergency brake. They can stop a bad situation from getting worse. They limit your losses and prevent you from making emotional decisions in the heat of the moment. This is crucial for maintaining a clear head. Equally important are take-profit orders. These help you lock in gains. These automatically lock in your profits when the price reaches your desired level. They ensure you don't get greedy. It takes the emotion out of trading and ensures you stick to your trading plan. Discipline is everything. Manage your risk effectively, and you'll be well on your way to becoming a successful trader. Remember, it's a journey, not a destination. Chapter 6. Demo Trading, Practice Makes Perfect. Alright, before you dive headfirst into the world of live trading, there's one crucial step you shouldn't skip: demo trading. Think of it like the training montage before the big fight. You've got your strategy, you understand risk management, now it's time to put your skills to the test without risking a single cent of real money. Most brokers offer demo accounts, which are essentially virtual trading accounts loaded with fake money. This allows you to get a feel for the market, test different strategies, and get comfortable with the trading platform, all without any financial consequences. It's the perfect risk-free environment to make mistakes and learn from them. The goal of demo trading isn't to become a millionaire with fake money. It's to develop your skills, build confidence, and get comfortable with the process of trading. Chapter 7. Making your first trade. Time to shine. This is it, the moment you've been waiting for. Placing your first real trade. It's both exciting and maybe a little nerve-wracking, but trust me, with the right preparation and mindset, you've got this. First things first, choose your currency pair wisely. Stick with the majors, like EUR USD, GBP USD, or USD JPY. These pairs are generally more liquid and have tighter spreads, which means lower trading costs for you. Next, analyze the market using the tools and indicators you learned about earlier. Look for potential trading setups based on your chosen strategy. Remember, patience is key. Don't force trades just because you feel like you need to be in the market. Once you've identified a potential trading opportunity, it's time to determine your position size. Remember the risk management rules we talked about? Never risk more than 1 to 2% of your account on a single trade. Double-check all the details, including the currency pair, the order type, buy or sell, the position size, and your stop loss and take profit levels. Congratulations, you've officially placed your first Forex trade. And there you have it. You've officially taken your first steps into the exciting world of Forex trading with just $100. Remember, this is a marathon, not a sprint. Focus on learning, developing your skills, and most importantly, managing your risk. And hey, if you found this video helpful, hit that like button below and subscribe to the channel for more Forex tips and strategies. Until next time, happy trading.